Welcome everybody to another 144 and 360. In this video, we're going to go over, answer a few questions that our premium members have asked about the Fibonacci retracements. And the first one, and we're also going to take a look at the soybeans here in the March, the Dow, and the NASDAQ, and see just how these things are playing out against the retracements themselves, following the 144 rules and guidelines. Now here in the beans, we start out with the March. Now you can come back here and you can see this, they went quite a bit through this 38% contract high and low, but there's something to look at here. This, we're way away from that at the time, but if we go back here and look at July, which was the contract at that time, you can see here not only was this area that I just showed you on the March 38% back to the November low, but 23% to the contract low. Now keeping that in mind, you'll see where we've got where we come in here, it is much cleaner than it does look like right here, because that's where the July was the nearby at that time and the lead contract. So we have our first rally, goes up to 61.8. Following our rules, 61.8 is what we're looking for. These cause congestion areas, and you can see even up to 78.6 down to 68.6. Now, one of the questions was like, what level should we be retracing back to? Now, when you come down here and you have your highest high, your highest low, we can retrace back here. But now once we've made this high, I can, and then this market comes off, I cannot retrace this level here back to the high. It just doesn't work. It does if you, but you're not following rules here. It's always the extreme move, the high and the low for that area. So until this market traded sideways here, all this time we could never retrace this high back to here. We couldn't retrace this low back to here because it did not take out this level up here. So once it did, then we can start taking the retracement from back down here again, along with, we can use it in here. So that's the next lowest low in a direction move. You got to be able, it's got to stand out in some way for you to even use it. So it's a visual. You'll get better with it over time of using it, but that is the most important low that stands out, is right here. Other than the extreme low, we start running retracements back up here. You can see 23% of this whole move here, 38 fell right in here. Then they made a new high again. We're going to run those same two levels again, and up in here you have 23% to the extreme low here and 38. Now you have to watch them all. You have to be running these retracements from each of these key levels. Like this one stands out, this one stands out, this one stands out more. And where we are right now, we have the beans obviously in a very positive direction because we've held back here back in July, the long-term swing point, and each retracement got stronger from 68.68 to 38 to 23 to 23, and here we are again up here now. But there's one thing that's happened, and that is we always watch 78.6 of a move, and following our other videos, you know that a move from 78.6 can send us 78.6 the other way, and that's from here to here. That's our initial target, is right down at 1492. As far as what to look for if this level up here at 1533 gets taken out, which was our swing point for the week to our premium members. You can see both highs, Monday, Thursday, both hitting it, not being able to get above it. So we're still looking for 92 down here. As far as what to look for in a bigger move or up above, if this level gets taken out, we'd like to see you become a premium member. As you know, anybody can look good on the left side of the chart and explaining things, but give us a try. See how these things play out. We call them ahead of time, give the levels ahead of time, and if anything gets hit, we update during the week if necessary. It is a weekly update. So that's where the beans are right now. Pretty positive, but still a little headwind up here at this 78.6%. Now, these are all just based on our rules that we use. And we'll go to, let's see, we're going to go to the NASDAQ now. And let me just take care of that. Maximize that. Bring this over here. And this is just a market that just really is it's just beautiful as far as just look at the screen and just see how many of these levels have been hit and what they did from 23 and 38 going back to the 2009-2020 lows up to 61.8, and then each of these highs in here just coming down. You can play off of them. You know what to look for following the 144 rules, and then even when they don't work, what you should be looking for. A question somebody had was in a previous video was, what about the 50% retracement? Well, first of all, it's not a Fibonacci retracement. That's more Gann's thing, was 50%. So you just have to look at this chart. Yes, markets do go to 50%, and what I found more than anything is it's that you get the stocks themselves going more to 50%, where you get the indexes and everything else, the commodities, all going to 38 and 61.8. So with the rules and guidelines we've given, you can follow this market, that you know what to look for. Even if it goes to 61.8, we know we're looking for 61.8. We know a market has a direction if it can stay under 23% or 38.2 or above it, and the 61 and 78 cause bigger swings. Now, just sticking with Fibonacci is why we don't do anything with the 50%, because we feel we've got it very well covered, as you can see on this chart here, where all of these retracements are. Currently, we put out a little newsletter for free that you can get on the website too, that we occasionally put out what we're looking for. This was our target up here, obviously 38 back to the all-time high. What are we looking for? A good run back down at the lows, possibly even new lows, but we watch every retracement as it goes along just to see how weak or how strong the market is. Of course, we had a major Gann square here too, and we love those things just as far as to help out with the retracements as to key levels, and love to see a combination of the two when they do. Those we give to our premium members as well, in the grains that is. We don't do anything yet in the NASDAQ other than our free outlook there. So that's that one. Now let's just take a look at, we're going to go to the Dow itself and just show you another index that's just in a different place, but still, in equities. So here we have that this market got down below 38%. And this is how you have to trade these things or follow them. When you ever exceed a level as big as you did down in here, you have to watch that, because this is all the way going back to the 2020 low. It is still a key level. And now if you spend 6 months down here below it, not as much. But when you spend a week, get back above, a few days back above, then you know the what we're looking for from 38% is new highs, or at least the attempt of that. So we can see the turns in here where the bottom was brought about by a 78.6% retracement. Hit it up here, could only go 23% back. New highs, 23%. Then just fell just a titch short of 78.6 back to the all-time high. Then held that move, took it down to 38, just above 38%. So what we have here is now the market went 78.6, and we know that from 78.6 we're looking for 78.6 the other way as the initial target. It also can be the end of this whole move, but that's why we watch all the retracements. Here's 78.6%. Right back down to it to complete the first phase of the target. Then 78, we would look for 78 again. here we are, you know, spent the time up here. Today we're down, so we're looking right here for 78%. Just happens to be a major Gantt square 2 in there. That will keep us trading in a sideways pattern. Once 38% were to be taken out, we would be looking for 61.8, and if 78.6 above gets taken out, we're looking for new all-time highs. Now, we hope that you're following these things on our blog, our webpage. You can get updates there for free. We also, that's where we post our premium members for our grains weekly. We'd hope that you would subscribe to the YouTube channel here. Give us a thumbs up if you like it, but more importantly, subscribe and give us a shot to see just how well we do this looking forward. As we said, anybody can tell you what's happened already, but can we tell you where it's going and what to look for and help you understand it so you can start doing this on your own, as far as having a general idea of where the market can go, what the potential is. It's a very what can you say, a very liberating or a feeling to be able to know, I mean, what is happening in this market with some sense of why. And you can take it into any market. It doesn't matter. Same rules. We're going into, if it's the bonds, if it's the grains, if it's, you know, stocks, we're still looking at it the exact same way, same rules, same guidelines. So please give us a look. And until then, thank you for watching this video, and have a great week.